In this video, guys, let's explore the 5 reasons you could be losing in trading. Stay tuned. Hey traders, warm welcome to you. All right, so it's the 5 reasons I think that you could be losing in trading. Number 1, you have a losing strategy. It's sometimes the case, guys, where your strategy is just beep. It's just not good. It's a strategy that just doesn't have a positive expectancy. And I know as a trader, it's very hard to, especially a new trader, well, what is my strategy? Does it have a positive expectancy? I don't know. I don't know, it's hard. But take a strategy that you think is okay. Buying in an uptrend, for example, buying dips in an uptrend, very simple strategy that logically has a good chance of success, and start from that and go, well, actually, I know this has got a good chance of success. I know there's an edge there. Let me use it. In a range bound condition. Selling near highs. Yes, there's more to it than that, but maybe that's a strategy that's has got a kind of positive expectancy just on its own. Maybe a slither, but working from that. And you've just got a losing strategy. And the trouble is, as traders, we're kind of focusing on mindset and discipline and all this kind of stuff, which is good. We need that. But if your strategy just is not working, it doesn't matter how good your mindset is and stuff. If your strategy is just poor, you have big drawdown, it's just not going to work. So have a winning strategy, have a strategy that works. And actually, guys, the strategy part of it isn't that hard. I know there's a lot of noise, there's a lot of fog, there's a lot of stuff, but once you've nailed down a strategy, that's the easier part. A strategy that's effective. It might not be effective in the short term, like next trade, but over the long term, it's a reasonable strategy, trading strategy that's working for you. Getting that done. So sometimes going too advanced and thinking discipline this, so you've got a losing strategy. Focus on the strategy. Number 2, stick to your rules. Common on this, this is a psychological mindset problem. This is, talk about this loads. It's unbecoming your perception of money, how you deal with money, how you deal with decisions, why you break rules, what rules you break. We talk about this chimp inside you with the chimp paradox type thing, and this kind of voice telling you to overrule things. That needs work, and that's a long process. That's things I talk about. Work on one thing at a time. Work on the FOMO, work on the overtrading, work on this, work on that. Work on those one thing at a time and crack the nut, crack the nut, crack the nut, crack the nut. Do that. Number 3, you deviate from the strategy. A common thing, maybe it's blended actually with 2, but rules is more a case of, I'm closing it a bit early, or I'm moving the stop, or I'm doing this and doing that. But deviate from the strategy is just taking a trade that's just not in the strategy. It's like, well, I think that's going up, I'll take it. And if you're doing that, then your strategy could be excellent, but you're undoing all the work with these naff trades here, or you're trading a market that's not working for you. Very common, actually, is that many traders will trade one market very, very well, and their kind of overall P&L is poor, and it's going down like I'm losing money. Why? Well, actually, look, more you're losing trades are in this market. Stop trading that market. Stop trading that damn market and just trade this market that's doing well for you. That might change in 6 months' time, but while it's working for you, stick with it and carry on with that. Use a strategy in that market. And sometimes being as objective with that is fine. Another one, especially with current conditions, is stop shorting stuff. The market is going, equities I'm talking about at the moment in stocks. Stop looking for shorts. Look at and this is not me saying you should do that, but it's me saying if you objectively look at your P&L, I've seen this with traders, objectively look at all their trades. Geez, if you just stopped shorting, you'd be in a way better position. Look, the market, the trend is up, so stick with that and focus that. Now, the trend may change, may go rotational, may go to a downtrend, but the point is, sometimes it's just going, well, look, there's an obvious thing that's glaring at me. Don't deviate from the strategy. Stick to the strategy. 4th thing is you go on tilt. This is a less common one with swing traders, but day traders definitely, you have the pressure, you're losing something FOMO, this and that and the other, and you get so frustrated, you get so annoyed, like, right, I'm just going to trade this now. I'm going to trade, trading, want to get that P&L back, digging a big hole for yourself, not using a specific strategy, not having a good risk management in place, doing all these things that just aren't going to work for you. They're just going to hinder you. You're trading on tilt. You're just going to end up digging a big hole for yourself. And you can have all the other things in place, and every now and then you go on tilt. Every now and then you dig this big hole, and that just stands like a sore thumb in your equity curve. It's like da la la la, and you're taking all the time to draw back again. You think, well, if I didn't have that, where would I be? Well, over kind of 5-6 years, you'd be way higher. So watching that, I know that's a little bit kind of similar to sticking to your rules, but it's something I think has to be looked at separately. The 5th and final thing, guys, your risk management / position sizing is poor. If you don't have good risk management, you are trading random position sizes. One time you're trading 10 lots, one time you're trading 1 lot, then you're trading 5, and you don't have any structure to it, you're going to get crazy results because you end up taking trades. You know, that 10 lot trade, let's use that example, compared to a 1 lot trade, has 10 times the weight on your equity curve as that one. And is that valid? Should that be doing that? Is that just on a whim, or is it structured? Is it graded in the trade? So when we talk about lot, is grading the trade. You know, how's your risk management? Are you kind of letting one trade really wipe you out and just taking a massive hit? Are you just grabbing little profits? Are you not letting these outliers potentially come into fruition? Are you not running trades in the right conditions? You know, this stuff, yes, it's similar to the strategy, but you know, it could just be you've got the strategy, you've got the discipline, but the risk is just wrong. You're risking too much per trade, and it's causing, you know, an upset to the P&L, or you're not risking enough per trade, or you're risking too much. There's too much of a dynamic risk per trade, or whatever it is. So, you know, it kind of have to look at all these different areas and go, right, how's my strategy? Fine. How's my discipline? Fine. How's my discipline in terms of operating the strategy? You know, do I have any crazy days or big red days? What's my risk management like? Am I getting unusual kind of choppy results from stuff? These are kind of some of the things you could be losing. Most people go, it's my discipline, it's my discipline, my discipline. Well, not necessarily. It could be an operational thing, especially the strategy. Make sure you got your strategy down. Make sure you're as confident as you can be that you've got a winning strategy. Then you work on discipline things. Then you work on risk management, work on the big tilt things, and operating from that perspective and looking at things objectively, going 1, 2, 3, 4, 5. That's okay, that's okay, that's okay. That needs work. Finish that needs work, fine, and doing it that way. Anyways, take care, see you next one. If you like this kind of stuff, thumbs up is appreciated. As always, bye-bye.